Back in the demo account video, I promised we'd go deep on trading psychology later in this series. This is that video. Because here's the uncomfortable truth. You can know every pip calculation, every candlestick pattern, every support and resistance level in this entire series, and still lose money, not because your analysis was wrong, but because of what happens in your head the moment real money is on the line. Let's talk about it properly. Two traders can look at the exact same setup, take the exact same trade, and get completely different results. Not because the market treated them differently, because they behaved differently once they were in it. One follows the stop loss and take profit they already decided on. The other moves their stop loss, closes early out of nerves, or adds to a losing position hoping it turns around. The strategy was identical. The outcome wasn't. That gap is entirely psychology. And it's the reason most beginners don't fail from a lack of knowledge. They fail from not managing themselves. Almost every emotional trading mistake traces back to one of two forces. Fear, closing a winning trade too early because you're scared of losing the profit you already have. Greed, staying in a winning trade far past your target because you want more, or risking too much because you're chasing a bigger win. Fear cuts your winners short. Greed lets your losers run and your risk grow. Notice both are about your reaction to the trade, not about the chart itself. Revenge trading happens after a loss, when you open a new trade almost immediately, often bigger than your normal size, trying to win back what you just lost. It rarely works, because that new trade wasn't based on a setup. It was based on emotion, and the position size is often reckless precisely because you're trying to fix a feeling, not follow a plan. The fix is almost mechanically simple. After a loss, step away before you place another trade. Not forever, just long enough to confirm your next entry is based on the chart, not on frustration. A win streak feels like proof you've figured it out. That feeling is exactly when position sizes tend to creep up, stop losses get skipped just this once, and setups get looser because everything's been working. One oversized loss during an overconfident streak can erase several careful wins. The math of risk management doesn't stop applying just because your last few trades went well. Consistency, not a hot streak, is what separates a trader from someone who got lucky for a few weeks. Keep the same rules on trade 10 as you did on trade 1. FOMO, the fear of missing out, is what happens when you see price moving fast without you in the trade, and you jump in purely because it's moving, not because you had a setup. By definition, you're entering after the move has already happened, with no support level, no trend line, no plan for where you're wrong. It's the opposite of everything covered in this series. If you can't explain your reason for a trade in one sentence using the tools from this series, it's FOMO, not a setup, and the trade ticket should stay closed. Every technique in this series, reading candles, drawing trend lines, setting a stop loss, only works if you actually follow it once the trade is live. Discipline is doing that even when it's uncomfortable. That's the entire reason a demo account matters. Building the habit of sticking to your plan while there's zero financial pressure, so it's already automatic by the time real money is involved. Discipline isn't a personality trait some traders are born with. It's a habit built one trade at a time, and every trade where you follow your plan anyway makes the next one easier. Let's lock this in. Identical strategies can get different results. Psychology is the gap. Fear cuts winners short. Greed lets losers run. After a loss, step away before the next trade. A win streak doesn't excuse skipping your rules. No one-sentence reason means it's FOMO, not a setup. Discipline is a habit, built one trade at a time. And that's season 1 of the trading ledger, from what Forex trading actually is, all the way to the psychology behind every trade you'll ever place. If you've made it through this whole series, you genuinely know more than most people who jump into trading blind. Go build on it, on a demo account, at your own pace. If this series helped you, hit like and subscribe. It tells me exactly what to build more of next. And drop a comment below. Which video in this series helped you the most? I read every one. See you in the next video.